Good afternoon, everybody. I believe we are live here. Today is Friday, the 20th of May, 2011. Let's go ahead and take a look at these markets. The S&P 500, we finished on a down note for the markets here today. And for the week, it was, I guess, kind of flat to slightly down. I'm not 100% sure, but let's see. We can go back 5 days ago. We were right here. So we're down slightly in the S&P 500. And we've got kind of mixed messages, like I said on Twitter there, that we're holding above this level barely, or pretty much right at the level that we've been looking at as far as an important level, because it was this breakout point that we had seen in mid-April, and the basis of that inverted head and shoulders pattern. We kind of battled with that all week after it had been support really all month so far. And so far we held the 50-day moving average this week. We can draw some trend lines actually that are probably more visible on the 130-minute time frame, and just check and make sure we're good, and it looks like we are. But this 65-minute time frame, we can see we've got this uptrend line from the recent each of these little sell-offs here. And then we also have this trend line here that's acted as resistance this week. So we have a 50-day moving average that has held so far in the S&P 500. Some of the other markets like the NASDAQ got down to the 100-day moving average. The Russell 2000 also touched on that 100-day moving average. And the real concern for the market is I think these financials, they could just continue to show this terrible pattern of lower highs and lower lows, and looking like it really, it'd be really surprising, I guess, next week if we didn't touch that 200-day minimum, 200-day moving average as a minimum, and perhaps we go a little bit lower than that. So far, the market has really kind of ignored the weakness of the financials, and how long can that continue? We'll see. But really, again, we've got these mixed messages. This is a big level with this 136.80, and the battle continues to be fought there. So what we saw this week was that Fibonacci level at 50% retracement, or 61.8 rather percent retracement of the mid-April lows to the recent to the May 1st highs. We came down almost exactly 61.8%, adding another point to this trend line and touching that 50-day moving average. So I think it's very clear now that this level where we, the lows from this week are going to be a very important level next week. So down below 132, I think it's pretty easy that we would then see at least a test of the 100-day moving average. And that's not really far-fetched anyways. When you look in the left corner there, you can see that the 100-day moving average is actually at 131.42. So, the 100-day moving average is definitely within reach, and it would basically close this gap as well. Beyond that, I think that we have to take it kind of day by day, but look at this market and say that we've been struggling with, we've been trying to get above this 5-day moving average. It's unable to close above there and make a higher high. So we closed above, we closed above, we closed above, but it wasn't able to make a higher high than the previous high that we had seen when the market was able to hold above that 5-day moving average. So again, we've got that trend line. I think next week, if we can get back above 135, then the bulls can breathe a lot easier. But back below this week's lows, there could be trouble. I don't really like the way that we closed today with, right below that 5-day moving average, and we broke below the lows of Thursday, and we made a lower high. So we made a lower high and we made a lower low based on Thursday's action, and obviously that's just one day. But when you start looking at the trend for the week, we closed pretty much right on the volume weighted average price for the last 5 days, and that and just above today's daily R2 S2 rather as well. So we're in a tricky spot, and there's still a lot of good setups in the individual stocks. And for now, until the market really gives us a bigger directional bias, we have to remain flexible and look at this market and look to think that there's going to be direct opportunities, that is, in both directions. Looking at the NASDAQ, the NASDAQ gives us a little bit more reason for concern. We had tried to break past the 50, these highs here at 59 and a half, 59.30, and as we know, we had that range that was setting up the prior 2 weeks. Well, on Monday we broke down below that. We came and tested the 100-day moving average. That's the blue line right here, and since then what we've seen is that this level, and what I was talking about was actually kind of a range, and it's kind of true for the semiconductors as well, that these lows and then up to here would be the basis of or what should be the zone of resistance when we broke below it and rallied back up, that this would become the important zone of resistance that this market would need to recapture in order to become favorable again. And I think that next week we're still going to be looking at about $58.40. If we can get above and hold above there for about a half hour or more, then maybe this market's going to just kind of turn back sideways into this bigger range, or this longer range, because it actually wasn't a big range at all. It was less than a point that NASDAQ had traded in for the period of 2 weeks or so. But when we start to back it up a little bit, the 65-minute time frame, we've got this trend line that's holding as well, and we have, you look at it, and it's right now we have to look at it as support becoming resistance. Well, we've seen this story before as well. We've seen that support became resistance for a little while, then the market gaps up, and the question is, what's going to be the catalyst next week? What's going to provide that impetus to maybe gap higher? Because we can't just look at this one-dimensionally and say, okay, well, support broken becomes resistance. What if we get back above there? What are the likely catalysts? I don't think we really have many, if any, big earnings reports left for this cycle, but possibly we're going to see that. Maybe there's some deals, I don't know, but I think it just makes sense to be a little bit more cautious when we see the market find support at the 50-day moving average, then the 100 fails, then you get the 150. And take a look, for instance, at Apple. Apple was riding that 50-day moving average, more repeated test of that 50-day moving average. It broke. It came down to the 100-day moving average. The 100-day failed. Now we're down testing again the 150-day moving average. If you look at a weekly chart, we haven't tested that 200-day or 40-week moving average. We haven't come close to it since about August of last year. So we've had this big run, and what if we had a pullback to the 200-day moving average in Apple? I don't think it would be that big of a deal. We could just be basically tying the lows for this year and coming up to this weekly uptrend line. So, you look at Apple and say, what if we, it's basically down to 320 or so. If we got down to 320, that's, a 15-point drop. That's, what is that, 5%? Not really a bad drop, but when you look at the intraday of Apple, so the 30-minute time frame here, we can see a clear break of support and then lower highs and lower lows. We've had this 5-day moving average that's been declining, and really a terrible close in the stock today. So I think you have to look at Apple as maybe headed back for at least a test of 320 to 325, and that's obviously what I think could be the bigger catalyst for what appears to be the intermediate term path of least resistance in the NASDAQ, which is lower. So we have a declining 5-day moving average. We have this prior support level in here holding as resistance, and it appears that we break below this level here today, 57.65 or so. We're going to get at least a test, I would think, of 57. And then we have to look at that and say, well, what's below 57? We have our 100-day moving average, which has been tested a couple times. Maybe this NASDAQ goes down to the 150-day moving average, down at 56. That would get a lot of people's attention. I don't think it would be a horribly damaging thing still for the weekly time frame. But, you have to look at it and say, things are becoming a little bit more dangerous maybe in the intermediate term. The Russell 2000 has really been a mess, and here for the last several months. This is the big level. We tested it again this week, and this is basically the same lows that we had seen in early April, down at about 81.5. Let's actually take a look and see what those numbers are. Not that you want to set an alert and say, okay, below that level I get bearish, but 81.45, and this week we saw the low of 81.40. So if you had shorted below the prior low, it did what it does a lot of times, is it'll make that new little low, in this case by a nickel, and then get a sharp rally. Because you have to ask yourself, where does it come from? It's already dropped from 85.5 down to that 81.5 level, and those breakdowns don't typically lead to the bigger breakdown until we get a bounce, and we got that little bounce here this week. So when we look at the daily chart, we've got, again, here's our second test of the 100-day moving average. The Russell's really been the strongest market. It's the market that, when you look at the monthly time frame, it's the market that broke out to all-time highs here last month, and now we're getting a pullback from that level. Could we see maybe the 100, these levels tested, the lows for the year? Eventually, sure, but we have to look at what's between that, and what's between that is basically this bigger level, this level from this week, 81.40, is clearly an important level. We've seen. Let's just draw a line straight across there. We see that it's kind of making maybe this head and shoulders pattern. It's gotten pretty sloppy in here, but when you start breaking it down and look at again the direction of the 5-day moving average, we had this big mess over in here. It looked like it was gonna hold up over in here, and then it quickly broke down, which is why when it makes a lower low, you have to get out regardless of the direction of the moving average and then let the dust settle. Well, then that prior support became resistance. Now we're breaking down here a little bit further. We've got a downtrend line in the Russell that's not as pronounced or as defined as we see in the S&P 500, which we're looking at right here, but the Russell 2000, and we've kind of got some different areas. This has been really the area of support for the last couple months, really. That we see basically 81.5, 81.30 up to about 82. This has been our band of support, and I think breaking below that could get the attention of a lot of people, and we see a deeper pullback down towards 80. So I think that next week we want to be a lot more cautious. This market is showing us lower highs. We've got a declining 10 and 20-day moving average. It's not bearish yet. It's more maybe distribution. It's probably even too early to call it distribution. It's more sideways type action that has the potential in hindsight to say that was distribution. But the fact is, if this market breaks back higher, then it was just consolidating through time. We don't know until we break bigger levels, and the weekly time frame is still bullish in here, but you can see the importance of where we are right now, that we've kind of been in this level, and the next bigger level is really down at the lows that we've seen for the year, near 77. The semiconductors survived, at least briefly, a strong breakdown this week. It was really looking like, well, now we're losing the semiconductors. Maybe things are going to get worse, but we kind of looked like this bearish flag. It gapped open, rallied, and now we're still having the same issues, that we have a declining 5-day moving average. We're not making higher highs. We're making lower highs with the 5-day moving average declining. Now this group didn't fall apart. We found some support at what was the gap level for this week. So this after the breakdown, those highs, and let's take a look at the 10-minute time frame to get a better picture in there, that those highs prior to the gap held as support, but we were finding resistance at the declining 5-day moving average. And if you consider something like, well, what's the average price since that market gapped higher? The volume weighted average price, right there, right about the 5-day moving average. If we take a look at since the gap lower here, what's the volume weighted average price? We're right at it. So we're really at a kind of a critical battleground for these semiconductors for at least the intermediate term. It's way too early to look at a daily chart and say, as I'm sure some people are, hey, this is a double top in the semiconductors. We don't know that yet. If these semiconductors are making a double top, the way it works is this is point A, this is point B, this is point C. So A, B, and take a look at the definition of a double top, because you don't know it until after a couple things happen. We break an uptrend line, that's a warning sign, and then as we break below the point B, and then we take the height of this double top and subtract it from the breakdown point. So the breakdown point would be the horizontal level right here, and then that would give us a target down near 28. Now, I'm not making a call for that, and I think even if it got below these levels, I don't think it would be an easy shot down to 28. But you know what? You never know. Is there a trend line there? Is there anything else that makes sense near that 28? Kinda. So these are just potential scenarios. What we want to focus longer term potential scenarios. Realistically, if you're a short to intermediate term trader, it doesn't do you a whole lot of good, other than to be aware of this is what might be happening. What we want to be really aware of next week, I think, is this zone in here. That this has been kind of similar to the NASDAQ. This has been the zone of support, the prior zone of support. Now is it going to be resistance? So if we continue to hold now below about 36.20, if we continue to hold below there, then I think that these semiconductors are likely to at least test that 50-day moving average, and that's where we have that prior resistance from back in early April. Let's just clear that all up. But we can see the green 50-day moving average, and we'll see how it acts there. If it doesn't hold there, then what would we look for? Well, we've got the 100-day right below it. That would scare a few more people, and maybe some of these gaps get closed. But you know, we've had big rally, and we've got that trend line there that you can see as well. That did I even draw that the way I should? Either way, if you take it off the lows, it really didn't make much difference. So, you know, I think that 50-day to 100-day moving average in the semiconductors really looks kind of like a level that it should settle into, and I deleted the wrong trend line. If we take it off these lows, you can see this prior resistance ties in with that trend line off of the September lows, and this prior in the 50-day moving average. So it's not looking like the end of the world by any measure, but it's looking like some of these stocks are breaking down a little bit, and it's not a big thing to be concerned about, I don't believe. But these are levels that we want to be aware of, and what's the possibility if we break down through some of these levels. That's really all we can look at for now. And again, the financials, you look at some of the components in here. You look at Citigroup. It's just been a disaster since that reverse split. J.P. Morgan is just looking like a bunch of drop-offs and low volume rallies. Goldman Sachs, everyone loves to hate Goldman Sachs, and Goldman Sachs, maybe Goldman's going to settle in next week down near these lows, or go slightly below them and then turn around. Would be a more plausible scenario, is that we get a breakdown through there and then we rally up a little bit, kind of like breaking down below this level. It didn't work so much right there though, but that's what we have happen a lot of times, is we break an important level and then rally. Not all the time, but the trend is clearly lower in Goldman Sachs on a weekly chart, on a daily chart, and those are the things that make up for the movements in the XLF. The XLF obviously is just an index. This week I was looking at maybe the IYR. I was thinking earlier in the week that the commercial real estate would drop down towards 60. I still think that's a good possibility. Maybe for next week we have the downtrend line in here as well. $60.50 is kind of an important level. I'd keep an eye on that next week. Breaking below that, but then where is the 50-day moving average? Well, it's only 50 cents away, so not even probably a very good trade. Silver continues to just kind of settle in here, and the volume's coming out of it because it's volatility is not there. Nobody's caring about it as much. I successfully banned it from my trading this week, and I think that was a good thing because the volatility again is just really kind of diminished. I think there'll still be volatile moves in silver, but again, if they didn't scare you out on the way down, they're generally going to wear you out of a market like that. The retailers had a tough day today. Now they've been real strong recently. The retail index, if you take a look at them, and maybe they're pulling back towards these recent highs near 110. But what was it? One of the was it Estee Lauder today, or what was the one I was looking at? Ralph Lauren, I think, was the one that had the rougher day. But I mean, you can't look at these charts as being bearish because they're clearly not. They're not bearish. We've got a giant uptrend, and a big volume one day gets a lot of people nervous. But these markets are in bigger uptrends, and with rising 10, 20, 30, 40 week moving averages, they just don't look that horrible overall. A couple stocks that look decent. Let's see. Let's take a look at LinkedIn first. So how do you trade an IPO? Well, I didn't trade it, but you don't have much to go on. You have Fibonacci's. You had a move below the VWAP yesterday. The market got back above VWAP and ramped higher. Now this is the volume weighted average price since the first publicly traded shares traded. So after market shares. Obviously, some people got it at the deal price, which was I think was 46 or 48, but the average participant in the after hours now owns it at about $97.50. So they're down about $4.50 on it, and you've got some support in here near term, breaking below 91 and a half. Maybe LinkedIn's going to drop down. I think that if you're trading LinkedIn, you're probably an addict, and I feel I've shared needles with you before, but I'm not getting on this one. Anyways, let's take a look at Qualcomm was one that we had on our watch today. I was concerned that maybe it was stuck at the 57.50 level, but Qualcomm's holding up nicely here. We had some prior resistance in this 55-ish area. It got back above that. It's been holding as support. We've got these moving averages rising. Now you look at a weekly chart. We've got it holding up in here. And then you take a look at the monthly chart. These are pretty important levels that if Qualcomm maybe gets above these highs about 58 next week, maybe this is a stock that's going to continue to move higher. I'd keep that one on your watch list. A lower priced one that for some reason I've kind of been I don't know, not obsessed, fascinated with is the CIGX. I really should read more about the company, but I think they make like a safe way to smoke, and who knows whether that's bullshit or what, but it's been holding up in here. They had earnings a week and a half, 2 weeks ago. The 30-minute time frame, we've got a couple of resistance levels, one at 420, so that's the 420 is a first level of resistance this stock's going to need to get back above. But then 440, if it can clear 440 next week, then I would I would maybe buy a little bit above 420 and then add to it above 440. Actually, I own a little bit of it, but it's just a small piece to something I can keep, so I can keep my eye on it. It had a little bit of volume here at the end of the day, but 420, really 422 to 423, and then 440 are the real levels to keep an eye on in there next week. If the semiconductors don't break down, stocks like On Semiconductor, ONNN, this stock is holding up near breakout levels that if it got past these levels, it could continue to run. If you take a look and draw a horizontal line across where we are and maybe where we have the potential to be, take a look at that. That's a possibility for some upside. And IDTI is another semiconductor. I think they're I don't know exactly what they do, but look at where they are and where they have the potential to go. It's still got some room to run in IDTI, and it's holding up in a tight little range here, kind of similar to on Semiconductor. And you can look at this as a kind of a bullish looking flag type consolidation. That if it breaks past that, prior resistance becoming support. We've got all rising moving averages. That's worth keeping an eye on. I'd shown on Alpha Trends, I had done a trade on Mylan Labs. Mylan is, Forest Labs, if you tuned in Wednesday, I missed Forest Labs. I was being a little stingy with my purchase on Forest. What I wanted to see in there was, I wanted to see it get past 2360, but I wanted to run up, pull back, and then do it. So, I was trying to be a little too cute with the entry, and it was a nice move in Forest Labs. Mylan is another generic drug manufacturer. We've kind of had this prior resistance holding a support at the 50-day moving average. It got a little bit choppy in here, and like I said, I hate to buy these spikes after it makes a run. So it was on my radar, and for some reason I was watching it because it dropped a little bit this morning, and it came down to what was yesterday's volume weighted average price and the pivot. So I decided to buy some right there at 91 cents. My out was going to be right here below this yesterday afternoon's low. But a lot of times the pivot, first thing in the morning when you have one of those quick sell-offs, the pivot does act as support. So I bought it in there at 91 cents and sold some at 24, I don't know, 11. You can check the video, and set my stop at so I think I bought it at 91 or 92 cents and set the stop right here, which was just below the volume weighted average price. So I was pleased with it. It wasn't a big money maker on 1,000 shares. I think I made $130. But the point is, I didn't lose money, and a lot of people did. The average person did lose money because it closed below the volume weighted average price today. And I was simply trying to make an example of how to use that, a pivot level, volume weighted average price, scaling out of a little bit of stock, and that sort of thing. But Tesla is another one that's still, it came back out of nowhere yesterday. I've been talking about this stock. It's got a huge short position in it. The bigger level up near about 28 and a quarter or some 28 and a half maybe, but it came back nicely yesterday with some volume. It looks worth keeping an eye on next week as well. And Dan, good seeing you as well. Let's take a look at MGM. This is one I had on the list for today, but I was afraid it was going to be stuck to the 15 strike, so I didn't trade it. Or was that yesterday? I don't remember. I think it was yesterday. But MGM looks good. It looks like it's heading at least first target right here. Let's take a look at the week, a little bit longer term chart. So 16 looks easy. I would say a worst case, absolute worst case for an investor type would be down near $14. But you look at the weekly chart. Here's where you can see some promise that if we can get beyond first this 16 level, then it seems as though it should be going on to test the 17 area. And 17's been a trouble spot for 2.5 years. You could call this a big cup and handle, or maybe it's a big ascending triangle with these higher lows on the weekly. But 17 is a big level. If we can get past that 17 level, then you got some blue sky here. You could make a run for it in MGM. So I like the way that one looks. Anyways, we're at the end of the show here. Thank you everybody for tuning in. Let's everybody have a good weekend, and I'll talk to you Monday. Thanks for tuning in, like I said.